That was an excellent day for the stock market. We saw participation outside of tech. Day 3 of gains, an incredible turnaround from the lows of the week, which aligned with the previous week's lows. Of course, ripping after selling hard as a volatile market, but going in bull's direction here without much resistance at levels I thought we would get some. Risk radar first. It looks a little frustrating maybe to have the red light on there, but as I said yesterday, I think this is a situation where we're not going to have a yellow. We're either going to blast right through the old range, light goes green, you make new highs, or we stick into this post-July rotation market, which hasn't been as reliable. So when I talk about the post-July rotation market, that's the peak of the NASDAQ in July. The NASDAQ chart is basically a triangle right now. You could say there's lower highs, you could say there's higher lows. The S&P is a lot stronger. The S&P 500 today testing the high end of that range from late August. But here's the point, given we had so many attempted moves in late August that resolved to the downside, it seems to me we're unlikely to get stuck in this range again because all of this is still part of the post-July regime where big tech has been underperforming, and 2 of those days, but let's just say Wednesday, for argument's sake, that was a pure NVIDIA move. Wednesday was a pure NVIDIA move. But what's fascinating is that today was very much a macro move. Today's rotation, Russell led, tech lagging. That's the trade that started back in July that's ultimately been a head fake over and over again. But today was fascinating because a few of the relationships I've talked about that have actually held in quite well didn't hold up today. Now, there was one thing that I did point out coming into today that was spot on, and that was the gap between the dollar and the 10-year. This is important to figure out why some of the other relationships broke down a little bit. The main relationship that broke down is that as bonds rallied today, stocks rallied too. Now, we've had that on the rotation days, but generally over the past 2 weeks, when bonds have been rallying, yields have been going down, and we price in 50 bips, the market hasn't liked that because it gets worried about what it means for the economy. But after the Timurose article overnight today from the Journal, essentially the closest mouthpiece to the Fed from a journalistic, independent standpoint, but the person who oftentimes has the most information about their inner workings puts out an article that the Fed is thinking about 50, and suddenly, boom, 50's live, but for different reasons. As we talked about with Alex Coffey here earlier, he made a very important point. If you're getting 50 because the Fed is celebrating and not because the economic data is saying we need it, the economy is bad, that's a totally different situation. And that article today put 50 on the table as a celebratory cut. And if you recall, that's the same phrase that I used in the Jackson Hole description. Powell sounded celebratory, so that's the phrasing I'm still sticking with here. If they're doing a celebratory 50 basis point cut because they feel the job is really done, mission accomplished, then that's different. And so for the first time in a long time, we go into next week not knowing what they're going to do. I also think that's a clever play by Powell because I believe for a while they need to be less transparent. I'll see you next week.